So what is my favorite stock? When I was asked this question, it really got me thinking a little bit, because the obvious answer may not be the correct one. Just like how you ask a teacher who their favorite student is, or a parent who their favorite kid is. The answer is usually, yeah, I don't really have a favorite one. I treat them all equally. Like, that is the obvious answer, but as we all know, is never equal. That's why we have the middle child syndrome and the teacher's pet, because things are never equal. Even with the 100 stocks I own, there's gotta be a favorite one. So how do I judge it? Is it based on performance, where it went 10x last year? Or is it based on conviction, where I'm willing to go all in on this one stock forever? I've decided to choose the latter, where I'm willing to hold this stock for the next 30 years. As you can see here, I've done exactly that with my RRSP account. This is a retirement account here in Canada, and the purpose for this retirement account is for you to lock in your funds, invest in something for the next 30 years, and then start withdrawing at the age of 65. So that is a true long-term investment. Not the GameStop that you hold for the next week and hope for it to double. This is a different beast. So I've come up with a couple criteria and reasons as to why I chose this one stock. The one stock that I'm willing to go all in on within this account. Welcome back, mindful investors. In this video, I'm going to break it into two separate parts. The first part are the couple criteria that I use to filter out the stocks. The stocks that I'm willing to hold on forever and possibly go all in on. And the second part is why I chose this certain stock. Let's get to it. Before we get started, I would love to know what your one stock is. The one stock that you're willing to hold on for the next 30 years and possibly go all in on. It's a great exercise so we can really go down deep as to why you invest in certain stocks and why maybe this isn't the right stock for you. In order for a stock to make the cut, you gotta go through a series of interview questions, right? I just simplified it down to 3 questions. The first 2 can be combined together. Is how much value do they provide me? Does a company or service save me money and time? If it doesn't do either one, then it's not giving me value. And the third question, are they irreplaceable? If the answer to all 3 of these questions are yes, then it kind of moves on to the next bin. But if the answer to any of these questions is no, then it doesn't belong to my all-in one stock candidates. Okay, let's run through a couple examples. Let's use Netflix. Does Netflix save me time and money? It does save me money because the cost is much lower than regular cable. But does it save me time? Well, once you order it, you kind of tend to want to binge watch certain shows to make it worthwhile. So the answer there is no. And on to the third question, is it irreplaceable? Well, for me, the answer is no, because there's so many other streaming services, like Disney Plus, Amazon Prime Video, or even YouTube. There's so much content out there that can easily replace Netflix. Overall, for Netflix is 1 yes and 2 no's. It's a pass for me. Now let's take a look at the next one, Tesla. It will be many people's favorites because it's gone up so much. But does it pass my 3 questions? Do they save me time, money, and are they irreplaceable? So the first one, do they save me time? Well, they can go from 0 to 60 in 2 seconds. So in that sense, that saves me time. But I really think the benefits there is marginal. So that's a no. Does it save me money? Well, just the base model of the Model 3 is already double my Civic. So that's an obvious no. And the third question, are they irreplaceable? At this very point, no, there's so many other EV vehicles out there. Until they get the full self-driving going and the robo-taxi network, right now the answer to these 3 questions is obvious no's. So there's a pass for me as well. Even though I passed on Netflix and Tesla, I still own these stocks, but just not within this all-in one stock portfolio. Now I'm going to talk about the one stock that I picked, Google. There are 3 main reasons I'm going to talk about. Number 1, obviously, is for the YouTube algorithm, so they can push my videos and my channel. Number 2 is my conviction that data is the new oil. As some of you may know, the richest man in the 1900s is John Rockefeller, and he owned all the oil. So for my pick, I picked the company that has the most data on us. In this study that was conducted 2 weeks ago, it shows that Android owns 72% of the mobile OS market. And together with Apple iOS, they own 99% of the mobile market. It's pretty sad for the Windows OS. But anyways, and then if I browse my iPhone right here, if I look at the battery usage on my phone, I see that YouTube and Chrome are my most used apps, and they're both owned by Google. Let's do some simple math here. We have 72% of the users on Android right now. And for the remaining 28% of the iPhone users, half the time are on Google apps. So multiply by 0.5. So in total, 86% of the mobile data will go through Google. As I mentioned before, data is king. And also with the evolution of 5G, there's so much more data to collect. As we can see here, right now there are 3 billion smartphone users around the world. But that's less than half the population. With the adoption of emerging markets, the Android dominance will continue. For this simple fact, Android phones are much cheaper than iPhones. We can get a brand new Android phone for $100. But a brand new iPhone, the cheapest and absolute lowest end one, is like $500 plus. The iOS products will always be at a premium. And that's not for the emerging markets. Emerging markets, they're not going to pay $2,000 for the newest iPhones. But $100? Why not? So why is my one-stock Google? Let's answer the first two questions. Does it save me time and money? It can save me time in many different aspects. For example, if I want to find information on something, I can just simply Google it without relying on any external sources. Like I didn't have to call a friend, I don't have to go to the library. I just open Chrome and Google it. And if I want to know how to fix the toilet, I can simply YouTube it. There are hundreds and thousands of troubleshooting videos out there. All free. Does it save me money? Well, with the Google and YouTube searches, it's all free. With the Gmail, it's free. With their open source Android platform, it's free as well. So every single thing is free. And there are a couple saying that there's never a free lunch. And it's true. If the product is free, then you are the product. Google is providing all these services for you to collect your data. Therefore, you are the product. They're just providing this free platform just to collect more data from us. And since data is the new oil, they can easily cash in on it. They can sell the data to ad sponsors, businesses, or other apps. The opportunities are endless with this data. The last point I want to make is that Google is a huge company. If we look at the ticker symbol, GOOG, they're not labeled as Google. The parent company is called Alphabet because the whole umbrella is like 200-300 companies and is always growing. This is because of how big they are. Right now, the market cap is $1.4 trillion. $1.4 trillion. And every single year, they acquire more companies. Let's look at the list here. It shows the first letter of the acquired companies, A to Z. And every year, this number grows. If we look at this linkage map between the parent company and all the acquisition companies, we see that each of the main ones, let's say Gmail, is ran by like 5 different companies. Each of them are either processing or manipulating your data. And then also Google Maps, there are like 10 sub companies here. If we ever open Google Maps nowadays, we see sponsored ads. So we open Google Maps and we see a logo for Starbucks or McDonald's. These aren't free. Like they're getting placement ads. So there are so many ways for them to cash in on your data. Now let's look at Android. Right here, these lines are ridiculous. There are over 30 companies all linking to Android. And YouTube, maybe 10, 15 companies linking to YouTube. Just think about all the things they're doing in the background. Whenever you watch a video, whenever you do a Google search, whenever you use a Google Drive or Gmail even, every single piece of data is money. To reinforce this last point of how valuable acquisitions are, we're going to use synergy. To demonstrate business synergy is very simple. Is 1 + 1 greater than 2? Let's use this very simple analogy. If we have 2 different YouTube channels, each with 100 subs, and they do a collab video together. Together, this video's audience would be more than the 200, would be more than the 100 + 100 because of business synergy. When you have these type of collabs, usually they'll generate more views. Therefore, the YouTube algorithm will push it even further. Hence the 1 + 1 greater than 2 synergy. But wait, this effect magnifies itself if we have more and more companies. Let's say if we have 5 companies, A, B, C, D, E, then there's synergy between each of these. And then there's second level between every second company. There's a third level where you combine any 3 of these, and they have synergy as well. They can pretty much work together to share this data that Google is collecting from us. All these companies are sharing data from Google. So that is a huge synergy there. A couple hundred companies sharing the data, manipulating it, and then sharing the second level data, and the third level, and the fourth level. That is why Google is my #1 all-in stock. So that wraps it up for this favorite stock video. Like and subscribe if you found any value in the video. As always, thanks for watching, take care, and I'll see you in the next one.